Before we get started, hit that like button, subscribe to Bitcoin Traveler, and share this video with someone who's trying to understand Bitcoin. It helps the channel grow and helps us bring these conversations to more people. Today, we're asking a question that might sound crazy at first. What if Bitcoin isn't an investment? What if we've been looking at it completely wrong? Joining me is Dr. Alexandra Bennett, economist, author, and advisor on global monetary systems. She spent decades studying money, markets, and how societies store wealth. Dr. Bennett, thanks for being here. Let me start with this. If someone works for 40 years, saves diligently, avoids debt, and does everything society tells them to do, but they still feel like they're falling behind, what's going on?
What's happening is that most people believe they're saving wealth when they're actually saving currency. And those aren't necessarily the same thing. The average person spends their life focused on earning more money, but very few stop and ask what money actually is. That's where the conversation gets interesting.
So what is money?
Money is a technology. Most people think of technology as smartphones, airplanes, or artificial intelligence. But money may be one of the most important technologies ever created. Money allows human beings to store the value of their labor and exchange it across time. Without money, civilization as we know it wouldn't exist.
That's interesting because most people never think of money as technology.
Exactly. And when you start viewing it as technology, you begin asking different questions. Is it improving? Is it becoming more efficient? Is it preserving value? Or is it losing effectiveness over time? Those are the same questions we ask of every other technology.
Most people watching this have probably heard that inflation is normal. They've heard prices go up. That's just how the world works. What's wrong with that thinking?
Imagine if every year your phone became 5% worse, or every year your car lost 5% of its horsepower. People would be outraged. Yet when money gradually loses purchasing power, society treats it as normal. We've become accustomed to something that previous generations would have found deeply concerning.
So when people complain that housing is expensive, food is expensive, and everything costs more, they're really talking about purchasing power.
Exactly. Price increases are only half the story. The other half is the declining purchasing power of the currency being used to buy those things. Most people focus on the price tag. Very few examine the measuring stick.
And this is where Bitcoin enters the conversation.
Right. Bitcoin asks a radical question. What if money had a fixed supply? What if nobody could create more whenever they wanted? What if the rules applied equally to everyone? For many people, Bitcoin is the first time they've seriously thought about those questions.
One thing that always fascinates me is that people call Bitcoin risky. But isn't there risk in every system?
Absolutely. There's market risk, political risk, currency risk, counterparty risk, technology risk. The real question isn't whether something has risk. The real question is which risks you're willing to accept. Many people see Bitcoin as risky because the price moves. Others see traditional currencies as risky because the purchasing power moves.
That's a completely different way of looking at it.
Most Bitcoin conversations are actually conversations about time, not price. Time. Because when someone buys Bitcoin, they're often making a bet that 5, 10, or 20 years from now, scarcity will matter more than it does today.
Let's talk about scarcity. Why does that matter so much?
Because scarcity creates value. Air is important, but it's abundant. Diamonds are valuable partly because they're scarce. Water in the desert is valuable because it's scarce. For the first time in history, Bitcoin introduced digital scarcity. That sounds simple, but it's a profound innovation. Before Bitcoin, digital things could be copied endlessly. Bitcoin changed that.
So Bitcoin isn't just digital money, it's digital scarcity.
Exactly. And once people understand that, they begin seeing Bitcoin differently. They're no longer comparing it to payment apps. They're comparing it to assets used to preserve wealth.
Let me finish with this. Imagine we're sitting here 20 years from now. What do you think people will say about this moment?
I think they'll say one of two things. Either Bitcoin was a remarkable experiment that changed how humanity thinks about money, or they'll say humanity witnessed the emergence of a new monetary asset and most people dismissed it because they were distracted by short-term price movements. History has a habit of looking obvious in hindsight. It rarely feels obvious while you're living through it.
And maybe that's the lesson. The biggest opportunities often don't look obvious at the beginning. They look strange. They look risky. They look controversial. Until one day they look inevitable. Dr. Bennett, thank you for joining us. And to everyone watching, I want to leave you with one question. What if Bitcoin isn't an investment? What if it's a new way of thinking about money itself? Let me know your thoughts in the comments. If you enjoyed this conversation, hit the like button, subscribe to Bitcoin Traveler, and share this video with someone who's still trying to understand Bitcoin. Until next time, keep learning, keep exploring, and keep questioning the world around you.